Okay, so the broad markets are coming down, the big indexes are coming down, and everyone's selling. That's wholesale selling. So 2015 is going to be a year of stock picking. And on that note, in the studio in Johannesburg is Victor von Reiche, Senior Analyst at Cannon Asset Managers, and he's got 5 juicy tips for us. And they're not the ones that you might expect. They're small to medium caps, and this is rather refreshing. Victor, tell us your first, please.
So the first pick is Consolidated Infrastructure Group. It's a company that with a phenomenal track record involved in electrification. They are a turnkey service provider, installing electrical substations, high overhead power cables, and they operate within a niche there with their subsidiary Conco. The shares recently pulled back 50% of earnings in Africa in dollar terms. So we think with the market quite expensive as it is now, that we're looking for mid and small cap industrial companies with a growing footprint into Africa.
Let's take a look at Meta. It's one of the ones that's come up in your top 5. One of the manufacturers that seem to show some degree of resilience to the manufacturing strike that we saw last year.
Yeah, 2014 was quite difficult for them with the motor and component strike. They also did some corporate action, Mutlu Akku, Turkish battery manufacturer. We expect them to beat that down in 2015 and hopefully a normalization in the labour market, so well positioned for 2015.
Yeah, I see a smart choice here, Omnia. Well incentivized management, rolling 5-year targets, dollar denominated earnings, a growing proportion outside of South Africa. People have been heading for the hills, but I guess what you're saying is if they head for the hills, you should pick up a few shares.
Yeah, that's what we think. I mean, as you said, incentivized to grow earnings by 8% in real terms. They've managed to deliver on that. The shares pulled back from 240 Rand to 170 odd Rand. We think they face temporary headwinds with a slowdown in the mining industry, but what you've seen is an increasing exposure in the agricultural, increasing importance, shall I say, in the agricultural division. And we expect this to be a 5 to 10 year story. So we think at current valuations it's looking attractive.
Victor, as I said, your picks are mainly small to medium caps. In times like this, let's say that the volatility that we've seen in the first couple of weeks of 2015 continues and the big major indexes get whacked, whether it be by hedge funds or high-frequency traders, it doesn't matter. Do you find that the small and medium caps are considered to be more defensive during these times because they're ignored? Are they ignored at your peril? What is your experience in this field?
So our experience, I think, Lindsay, is obviously the big liquid shares, the top 40 shares get knocked down whenever there's a negative sentiment. We find that mid and small caps are less volatile and actually more defensive, especially companies with good business models, good management teams, and where the valuation is on your side. So we think that's quite a good place to be in 2015.
Victor, 2 of the stocks that we didn't get a chance to talk about, Afrimat and Sasfin, if you could, 2 completely different companies, of course, but in less than 30 seconds, give me an indication of the investment case for each.
Afrimat, similar story, great company, great management team. We think the valuation is looking attractive. Whilst you haven't seen big spend in the infrastructure, you've seen smaller spend on small, roads, smaller projects, and they benefit from that. So we think quite well positioned for 2015. And then Sasfin is growing into asset management, wealth management, transactional banking, also asset-backed finance in terms of taxi financing. So we think also good company, good management team, attractive valuation.
So we have a date for December, right? So come December 2015, we'll bring you back into studio and we'll take a look at how these stocks performed, and hopefully you won't be in too much trouble with too many people. That's a very big thank you to Victor von Reiche. He is a senior investment manager at Cannon Asset Managers.